Hi, and welcome back to Small Caps. My name is Jess Fertig, and today we are speaking with Paul Bibby, who is the Managing Director of Akora Resources Limited. The ASX ticker code is AKO. Hi, Paul. Welcome back to Small Caps. It's great to see you.
Oh, thank you, Jess. No, very good. We've had a great start to the year, and it's nice to be back with small caps.
Fantastic. So, Paul, I thought just to give our Small Caps audience a bit of an overview of the company and your projects for those of us who aren't familiar with Akora.
So Akora has several iron ore projects in Madagascar. We've been working on the Bekisopa flagship project for the last 3 years. We've had 4 drilling campaigns since we identified a 6-kilometre magnetic anomaly on the Bekisopa tenements. Those drilling campaigns have defined a 200 million tonne maiden resource, and follow-up drilling campaigns have identified significant at-surface lumpen fines iron ore for the blast furnace. Those tonnes, around 5 million tonnes, has enabled us to develop the scoping study, which was released in November of last year. And that shows a very low capital cost, $55 million US, to get into production from mine through to port at a low operating cost of 42 US dollars a tonne, generating significant cash flow, a payback in 2 years, and cash flow of approaching $300 million from that first 5 years of mine life, with each additional 2 million tonnes or additional years mine life adding at 100 US dollars, which is basically today's iron ore price, $100 million of cash flow. So a significant project, which is where our focus has been for the last 3 years. And recently, and I know we'll elaborate on this in the next few questions, our Satrokala project, where we've started doing some field geology and a ground magnetic survey, is proving up to be a very significant additional project for us.
Thanks, Paul. Now, I thought we might start with your Satrokala project, given your recent announcement that just went out, and we'll get to Bekisopa later. So Akora just announced a very promising discovery at that project, so at Satrokala. Now, can you tell us more about the significance of that 10-kilometre magnetic anomaly that you found through your exploration there?
Certainly. No, it's very exciting for us. Our work at Bekisopa was on a 6-kilometre magnetic anomaly, which was the starting point and the confidence for us to do more work. Late last year, October, November, we walked the ground on our main tenements at Satrokala, 10 kilometres north to south. And what we announced just recently was a very significant continuous magnetic anomaly along that 10-kilometre strike at Satrokala. It matches in with the earlier rock chip samples we did, averaging around 64, 65% iron. Very promising results, more than doubling our exploration target area for the iron ore mineralisation in that region. At Bekisopa's 6-kilometre strike, the exploration target is 1 billion tonnes of iron ore. So we've now gone from 6 to 10 at Satrokala. So we're expecting considerable additional exploration tonnes opportunity as we start drilling there this year.
Okay, brilliant. So now, Paul, how does this anomaly sort of influence your next steps in terms of exploration work at Satrokala?
Well, now that we've got the magnetic information, the 10-kilometre strike, depths to 1,000 metres below surface. So a very significant ore body, potentially. So the drilling that we'll be doing in the coming while will be looking at confirming that magnetic information from the geotechnical people, confirming what sort of grades and intercepts we're getting near surface, so that we can then do more drilling to prove up a resource, which we believe will be quite significant resource at Satrokala. It's probably worth noting, Jess, that our projects, both Bekisopa and Satrokala, are different to what we see here in Australia in terms of iron ore mines. And the project that is most similar to Bekisopa, and I think to Satrokala, and will be confirmed once we do the drilling, is the Cara mine in Sweden, which has been going for 25 years. The first 60 years as an open pit mine, the last 60 years as an underground mine, produced over 1 billion tonnes of iron ore product. So that's the project that we're sort of paying attention to and sort of modelling our way forward in comparison to that very significant long-term project.
Fantastic, Paul. Now, I wanted to sort of draw your attention to sort of connecting the dots between the Satrokala and the Bekisopa project. How do the findings that you found at Satrokala sort of compare to the Bekisopa project, which is your current focus?
Correct. So in 2019, before we listed Akora on the ASX, we walked the ground, both geologically looking for information, but then doing the magnetic survey. And that gave me the confidence to list the company. We knew there was something substantial there. So continuing that work and the drilling that's gone on there, we've now got to Satrokala. We've done the same work. We walked the ground. We've looked at the geology. We've done the rock chip samples. We've now done the ground magnetic survey, and it's a 10-kilometre strike. So it's very exciting. Drilling will confirm exactly what's below ground, as it always does. So we actually will now have two projects which we can work on. We can continue to advance Bekisopa. The scoping study's been done. We've started the PFS, and we will do the same work at Satrokala, but maybe even accelerate that because of the knowledge we've gained from Bekisopa, and have two substantial direct ship iron ore projects in south central Madagascar.
Fantastic, Paul. Now, you've just mentioned that Akora has sort of, has had positive drill results from its Bekisopa project, and that you're going towards pre-feasibility. So can you tell us a little bit more about potential mine life and the project economics around that, and where you're up to with the pre-feasibility study at Bekisopa?
Certainly. So look, it's a little unusual to get into a scoping study only after sort of 2.5 years of drilling. But what we found was each drilling campaign, we've had 4 now at Bekisopa, has been very predictable. Each time we've drilled, we've got more tonnes of iron ore at surface in that weathered zone and similar grades. So we've fed that into the scoping study. That's identified a 5-year mine life, 2 million tonne per annum production product from mine to port. Capital costs, very low capital costs for a startup, $55 million, and payback of 2 years, and generates a significant cash flow at $100 long-term price, which is similar to the current price for iron ore at the moment. That generates $270 million free cash flow before tax from that first 5 years of mine life. We did some drilling late in the middle of last year. Those results were reported. Our engineering company is now upgrading the mineral resource estimate, and our expectation is to add a year or two more of mine life, going from 5 to 6 or 7 years of mine life. If we get to 7, that'll add another 200 million of cash flow. So potentially, 500 million of cash flow, a significant high margin project, which will be able to fund our future and even ride the wave of the iron ore price over time.
Brilliant, Paul. So now what is your sort of estimated production timeline and target grade for this initial phase?
Yes. So our target grade is the benchmark grade, 62%, which is the grade we see reported in the news and the papers. 62% iron. Overnight, I believe, was $100 a tonne. The last 5 years, the average has been 118 for 62%. So our target production rate is 2 million tonnes at basically a $50 margin at $100. So a very attractive, profitable project. And even at an $80 price, a $30 margin is pretty nice for such a good project. So look, we're doing the PFS. The focus on the PFS, as everyone in this sort of business knows, of bulk commodities, is all about logistics. The mining and the geology is understood. The processing is conventional, straightforward. It's about getting it to port and getting it to customers. So the PFS right now is focusing on the port activities, and the logistics on the highway to get to that port.
Yeah, fantastic, Paul. And now just sort of shifting gears back to Satrokala. So now the company has sort of growing importance, so it's focusing on Satrokala a little bit more. How does this project sort of fit into the company's overall strategy in supplying high-grade iron ore for greener steel production?
So what Satrokala will do is it will potentially add more years of low-cost DSO mining, direct ship or lump and fines for the conventional blast furnace project, and generate more cash. It's 40 kilometres closer to the port, so that's attractive in terms of logistics. But that just means we've got more mine life from those two projects to generate the cash. that cash we can then use to build the processing and logistics for a longer term, high-grade concentrate, low impurities for the green steel future. And as we know, there's a big deficit forecast for high-grade concentrates, better than 67 or 68% iron with low impurities. Akora has shown that we can deliver that product. And as that demand comes to market, grows in the next 8 or 10 years, we'll be in a position to supply that after building a very robust operation from the direct ship lump and fines iron ore.
Yeah, absolutely, Paul. Now, I have just one final question for you, and that is, can you provide our small caps audience just 2 or 3 key takeaways? We've discussed so many things, and the company's got so many positive things happening, but just 2 or 3 key investment takeaways as to why they should have Akora on their stock watch list.
Yeah, Akora is in a unique position, Jess, and investors. We've got the DSO in that weathered zone, low capital cost, high margin project to generate cash and to get the company established and running. Once that is mined and delivered the cash and the customer acceptance, we can then move into mining the fresh rock below that weathered zone, which is the green steel high-grade concentrate for the future. We can see potentially many decades of mine life at Madagascar, very strong financials and a very, very encouraging projects. It's quite a unique opportunity that we have in Akora.
Fantastic, Paul. Thank you so much. And thank you for joining us back on Small Caps. It's great to have you back, and looking forward to having you back on the show to learn more about the Madagascar projects in the future.
Thank you very much, Jess. Appreciate it. And look, there is some good news flow coming in the coming months. So I guess we'll be back talking. So thank you kindly.